Good morning. It's March 30th, and the market is up again today. We're heading into not just month end, but quarter end. So, as you can imagine, investors might be pushing up the market for those quarter end marks. So, let's get to the Longbow dashboard for two reasons today. One, to look at where some key exposures are trading, technically speaking. And then second of all, a new tab I'd like to introduce to you. So let's head over there now. So first, I just have a few securities here. The SPY, so that's S&P ETF, it's overbought. So no surprise on that today after a couple of days of up moves here. The signal strength is pretty strong in the neutral camp, but that could flip if we see some additional moves in the market today upward. Similarly, though, VIX is heading towards the low end of the trading range. It's not quite there yet. So volatility has been suppressed. We have an overbought on the SPY. It's not, a momentum indicator of, green, green, go, meaning bullish for two. It's neutral. So this is when you think about, okay, maybe I need to put on some protection. I need to trim, manage the risk in my portfolio. And then here we've got the short high yield. This is off of the top 25 list, with upside of the top 25s. This is the left side of the page, 13.4 to 1 odds. And I put this in here because what does that mean for this ETF? It means that people are going long high yield. So they're, selling down the short ETF and they're going long high yield. So again, what do all these things together and the next one mean? People are taking on risk. So be really careful trading this. We put out a note in Arrows today about the technical reasons why this might be happening. Again, people pushing up some of those month-end numbers. We've got some options expiry coming up here too. And then not to leave this off, but MSTR. So we're thinking about the investment in crypto here. Really close to overbought. So, you're looking at the odds here. They're not in your favor. Be super careful about chasing this rally in crypto. Very, very careful. All of these things rhyme. So that's one of the things I wanted to point out today. If you're thinking about trimming, if you're thinking about putting on protection, today's a good day. And then I also want to introduce the Doomsday Dozen. So you can read a little bit about this, but it's basically, it compiles a whole bunch of different signals. So 12, as you can imagine, it's dozen, into one mega signal. And what you can see here is that we're heading towards like problem areas for extreme greed. And the doomsday score, you can see we're kind of in the orange / nearing red levels. So again, you put all of these things together. I'll let you go and check these out. But basically, if you scroll down the screen, you can see what comprises the signal. So we don't tell you the thresholds. We don't tell you the weightings of these, but there's junk bond demand, safe haven demand, the volatility of vol over volatility. We've got yield inversion. Obviously, the curve is inverted. Vol, which has been suppressed, so you have to be a little bit more careful because they're greedy. So I'll let you take a look at all these. If you have questions, let us know. But what we're seeing here is that we're not in, oh, everything's great. This is the time to be non-consensus and loading in the market. We're heading towards the red area, and you want to be a little bit more careful. So all of these things put together means, make sure you're managing risk out there today and into April, especially since earnings season is about to start. That's it, and I'll see you tomorrow on Friday.